What is going on with the interest rates? How did we get into this mess? Is there relief in sight? And if you are in the market right now, either as a buyer or as a seller trying to move your house, what type of things can you do to cross the finish line? All great questions, and certainly everybody's talking about interest rates. So we want to talk about the elephant in the room today, and with the idea of helping you cross the finish line as a buyer or as a seller. Hi, I'm Lorene Hetherington with hetheringtonteam.com and Parks Realty. I live here in Nashville, Tennessee, and I'm fortunate to lead a team of luxury agents. So we help people buy and sell homes in the Nashville, Tennessee area. But what we're talking about today is applicable no matter where you live. I mean, everybody is thinking about buying a house and they're all looking at interest rates. So we want to get some answers, and let's go right to the expert. Okay, joining us right now is James McCullough with Go Mortgage. James, probably the smartest lender I've ever had the opportunity to work with. So thanks for joining us, James.
You're welcome. I appreciate it. Thanks for inviting me to this.
Absolutely. So we want to get started with what everybody's talking about, the elephant in the room. Like, how did we get here? Like, why are rates so bad right now?
Yeah, what we've seen for probably the better part of the last year and a half, right, is everybody's seen the news. If you have read an article and or felt it everywhere that you're spending your money, which is inflation, right? We felt it either at the pump, paying bills, just the cost of daily living, and helping to combat the rising inflation, right? Not helping, but the way to curtail that is raise rates, unfortunately. And we've been seeing that for, like I said, the better part of the past year and a half.
So going into the fourth quarter, probably maybe see a little bit, or just a little higher or a little lower. But
we're hopeful is that we see a flat line and we don't see any more rate increases. Once again, really hopeful with what comes through on news this week. The next potential, rate hike could be September 20th, but if the numbers come in where they need to be, we hope that doesn't happen. And then that leads us going into the fourth quarter where rates are, flat level.
For buyers who want to buy right now, any suggestions on how they navigate the market? What can they do to help?
Once again, get pre-approved now, get your application, and find out where everything falls within line. Rate buy downs can be great if you're working with your lender to find out what the terms look like for you and when your break-even point is on your return of investment. And if that's going to be long enough out before you do look to refinance, a rate buy down could be very beneficial to help reduce that initial monthly payment for you.
Right. So I know a lot of buyer's agents, myself included, when we go and we make offers, we're actually asking for 1% of the loan amount to be given from the seller to give to the buyer at closing to help buy down the rates. Is that generally the number, 1% of the loan amount, or what's a good ballpark?
Well, 1% is a good one to start with, and that can be used on a number of different ways on a loan for the lender. Once again, you can use that towards the rate buy down. Yes. You can use that towards closing cost fees if the consumer decides that they don't want to do a rate buy down. So they have options with that. But 1% is a good starting point. There are some guidelines within whether doing an FHA or conventional where it kind of gets a little bit hairy as to how much you can actually contribute to a buyer. So I think 1% is a good starting point.
Are there certain type of loans that you should be looking at as a buyer if you know that, hey, in a couple of years you can refinance? Should they be going FHA? Should they be going conventional? Are there certain guidelines that they need to stick in if they think they really are going to refi?
Well, if they're really going to refi, and right now it's 100% what you just said is date the rate and marry the house. Because if you're comfortable with the monthly payment, then at that point it's what loan fits you best to be able to refinance when that time comes. So if that's a conventional loan, if that's an FHA, or if it's a VA, I think if you have options available to you to get pre-approved in this market, whatever is also going to help you get your offer accepted. Because refinancing any of those loans should and can easily be done when the time comes and rates do come down. If you start off in an FHA loan now, you can turn around and refinance into a conventional loan, when rates come down and or when there's a net tangible benefit. So that's my thoughts on that. Yeah.
Absolutely. So we also have sellers that are trying to unload their house so they can move and become a buyer wherever they're going. Any advice for sellers today that want to offer perhaps some incentives to get the best buyer possible?
Yeah, well, we talked about this, I think, over the phone just ourselves the other day. And one of those benefits is putting out there, potentially offering it to a buyer is some type of buy down towards their interest rate, whether it's what you would call a 1-1, 2-1, or a 3-1 buy down option. I think a lot of sellers see that maybe if their homes are sitting, instinctively it's to go ahead and do a price reduction, and maybe that helps open up eyeballs to buyers. But with rates where they're at right now, what's going to open up eyeballs to a lot of buyers is, hey, if I can buy this house, and if I'm starting off at this rate, but it can be bought down by 2 points, 1 point, or 3 points for the first year, and then increase as I'm in there to buy me time so that when I can refinance, that is going to be very eye-popping for a potential buyer and help a seller, I believe.
Oh, absolutely. And in a lot of these luxury markets, we're not seeing like $5,000 to $10,000 price reductions. We're seeing $50,000, $100,000. So I agree with you. It's perhaps shrewder and more mutually beneficial to take the price down a little bit so you get those eyeballs open, but then offer a huge amount to do a rate buy down or closing costs. Just help the buyer get in at a more affordable rate, because they're all looking at their best friends who got in 2 or 3 years ago that have 3% interest rates, which are just not going to happen.
No, that's not right now, or unfortunately for the foreseeable future. But the benefit is go ahead, buy now. And if you can't afford it, guess what's going to happen when you can refinance? That's going to help your pocketbooks quite a bit.
James, thanks so much for joining us. I so appreciate it. We'll be calling you and sending you more buyers. If you guys have any questions, we're going to go ahead and pop up James' cell phone number here right now. So if you have any questions, go ahead and call or text him directly. Thank you, James.
Thank you so much, Lorene. Great talking to you. Have a great day.
So to recap, a lot really depends on what happens in the next week, 2 weeks, and a month as far as if we're going to see any rate relief. But I think the bottom line is we're not going to see rates fluctuate a lot for the next 6 months. So if you are buying, it's super important to get dialed in with a great lender. You can call up James. His text was on the screen. It will also be below in the comments. And just start figuring out the roadmap on how to get into a great house. Again, my name is Lorene Hetherington. I specialize in Nashville, Tennessee homes for sale. If you have any questions, we'd love the opportunity to talk to you about the home buying process here in Nashville. Or if you know a person who's thinking about moving to Nashville, text us or call us. And when they come to town for that home tour, we'll be sure to get them into lots of great neighborhoods so they can decide where they want to live. We, of course, are all about helping you buy a house, get a fresh start, and live your best life yet. Thanks for watching. We'll see you next time.